So today we're diving into a real head-scratcher from the energy world. It all kicks off with this one company making a business move that honestly makes zero sense on the surface. But stick with me, because once you dig in, it's this huge flashing signal about a potential crisis that's brewing in the global uranium market.
All right, so let's get right to the heart of it. I mean, picture this. You run a business, right? You can make something for, say, $34 and turn around and sell it for more than 76. You'd be selling every last bit you could get your hands on, wouldn't you? Of course you would. Well, one company chose to sell absolutely nothing. Zero. Zilch. And figuring out why they did that? Well, that changes everything you think you know about the energy landscape.
Okay, so here are the numbers that just made Wall Street's collective jaw drop. Check this out. A company called Uranium Energy Corp, we'll call them UEC, they could have been raking in a profit of over $40 for every single pound of uranium they dug up. But what did they do? They sold none of it, reported $0 in revenue, and because of that, they actually posted a net loss of over $10 million for the quarter. Insane, right?
So let's unpack what's really going on here. Because, this isn't just some company having a bad quarter. No way. This is a deliberate, super counterintuitive strategy. And it tells a much bigger story.
So you're probably asking, where did all that uranium go? Well, UEC didn't just, stop producing it. Nope, they stockpiled it. They just sat on it. Right now, they are sitting on a hoard of uranium concentrate that's worth almost $112 million at today's prices.
And I want to be crystal clear here. This is not some company that's in trouble. UEC is flush. They've got almost $700 million in cash and inventory, and get this, zero debt. So they are choosing to spend around $30 million a quarter just to pile up and hold on to this stuff instead of selling it. This is a massive, calculated bet on what's coming next.
Okay, so to really get what that bet is all about, we have to pull the camera back. We need to zoom out from just this one company and look at the whole global market, because that's where the first big clues start to pop up.
First up, let's talk about Cameco. They're a huge producer out here in the West. Out of nowhere, they just slashed their 2025 production forecast. They blamed operational delays, but the bottom line is this. Poof! Just like that, 3 to 4 million pounds of uranium that the market was counting on, it's just gone.
And then you've got Kazatomprom. Now this is the big one. They're the single largest producer on the planet, responsible for something like 40% of all the uranium in the world. Now in a hot market where prices are up and demand is strong, what would you expect them to do? You'd expect them to be pumping out as much as possible, right? Well, instead, they just announced they're cutting their 2026 output by 10%. Let that sink in. The world's biggest supplier is deliberately turning down the tap. And at the exact same time that Western supply is getting tighter, a new player is jumping into the ring, and they are very aggressive. China is now throwing around huge amounts of cash to compete for what's left of the world's uranium supply. So get this, the state-owned China National Uranium Company just raised over $500 million in an IPO. Their shares went nuts, soaring over 280% on day one. They already control one of the biggest mines in the world, the Rossing mine in Namibia. And with 27 new reactors being built back home, their need for fuel is non-negotiable. They are perfectly positioned to just start buying up every pound they can find, right when everyone else is cutting back.
Okay, so the big players are already squeezing supply, but if you look just beneath the surface, past the main headlines, you find these other hidden flashpoints that are making the whole situation even riskier.
So our first hidden headwind takes us all the way to Malawi. There's a mine there that just reopened, and it was supposed to be this great new source of supply for the market. This mine, the Kayelekera mine, was set to add about 2.4 million pounds of uranium to the market every year, which sounds great, right? But here's the catch. It's operating under this really controversial 10-year deal that locks in super low royalties and taxes for the government, no matter how high uranium prices climb. And as you can imagine, that has created a huge backlash inside Malawi. It's raising the risk of something called resource nationalism. Basically, the government could get pressured to tear up the deal, renegotiate it, or even step in and take over, any of which could completely disrupt this supposedly new source of supply.
All right, our second headwind is a lot closer to home for folks in the US. We're talking about New Mexico.
So what happened is New Mexico just launched its very first state-led program to clean up old uranium mines. This is totally separate from the federal government's oversight. Now look, cleaning up old mines is obviously important for the environment, but this move sets a really big precedent. Think about it. If other states start doing the same thing, you suddenly have this whole new layer of red tape. It could jack up compliance costs and drag out the timelines for getting new mines permitted. And this is all happening at the exact moment the US is trying desperately to build up its own domestic supply. Okay, so we've got global supply shrinking, we've got these new, hidden risks popping up. Now let's connect all those dots back to that crazy zero revenue report and finally solve this thing.
This right here, this is the number that really matters. 115 million pounds. That is the gap, the annual gap, between how much uranium nuclear power plants actually need to keep the lights on and how much they've actually locked down in contracts. That is a massive, and I mean massive, shortfall every single year.
And that, right there, brings us full circle back to UEC's strategy. Suddenly, their logic starts to make perfect sense. Look, they're willing to eat millions in costs to just say no thanks to revenue today because they are betting the farm that this enormous supply gap is about to send the utilities into a full-blown panic. They're convinced a huge supply squeeze isn't a matter of if, but when, and they want to be holding a giant pile of inventory when that day comes.
And that's the bet, plain and simple. Why on earth would you sell your stuff for $76 a pound now, when every single sign is pointing to a future where that same stuff could be worth $140 a pound or maybe even way more than that? To them, paying a little bit to wait is nothing compared to the massive payoff they see coming down the line. So, when you put it all together, what's the real signal here? What is this one company's bizarre strategy really telling the entire market? Well, it's a textbook case of something called production discipline. It's a fancy term, but the idea is simple. It's when producers look at the market price and say, you know what, that's not enough. It doesn't make sense for us to sell off our precious, finite resource at that price. So what do? They hold back. They withhold supply from the market, either together or on their own, to basically force prices up to a level that they think is fair and sustainable. So, let's just run through the evidence one more time, right? Check these boxes. We've got verified production cuts from the biggest miners on Earth. We have demand absolutely exploding thanks to AI and the new nuclear renaissance. We have a huge structural gap between supply and demand that isn't going away. And now we have the producers themselves actively holding back product they could sell for a profit, basically screaming at the market that prices are way too low.
I mean, this quote just nails it. Think about it. When a company is willing to let its stock take a 9% hit and willing to report zero revenue, all while sitting on a product they could sell for 120% markup, they are telling you something. They are screaming it from the rooftops. They're telling you they are absolutely certain that much, much higher prices are coming, and soon.
So the signal's been sent. It's loud, it's clear, and it's coming from the producers themselves. They're telling us today's price just isn't reality. So the question we're all left with isn't if a supply squeeze is on its way. The only question now is, just how severe is it going to be when it finally hits?